Today, I want to talk about one of the most important real estate stories in the country right now, mortgage rates moving higher again, and what that means for agents, brokers, buyers, sellers, and the housing market overall. So, Freddie Mac says the average 30-year fixed rate is 6.46% as of April 2nd, 2026. Reuters also reported that MBA data showed rates at 6.57% in the week ending March 27th. Those are not abstract numbers. They directly affect buyer affordability, monthly payments, consumer confidence, and the way deals come together or fall apart. Now, one thing that makes this story more interesting is that the housing market is not completely frozen. NAR reported that existing home sales in February rose 1.7% month over month. Pending home sales rose 1.8% in February. So activity is not disappeared. That's important because it reminds us that higher rates do not kill the market. They change the market. That distinction matters. In a lower rate environment, more people can make the math work. They may stretch a little bit more, they may compete more aggressively, and they may tolerate a monthly payment that feels a little uncomfortable, but optimism is high and financing feels manageable. But when rates push higher, even modestly, the emotional tone of the market shifts. Buyers become more cautious. They second guess. They start recalculating. They ask whether they should wait. They widen their search radius. They look at smaller homes or different neighborhoods. Some decide to pause. Others stay active but become extremely price sensitive. That's the first key takeaway here. Rising mortgage rates do not just reduce affordability, they increase hesitation. For agents, this means the old approach of just sending listings and opening doors becomes even less effective. Your value is not just access. Your value is interpretation. You have to help clients understand what changed, how much it changed, and what realistic options they still have. A quarter-point move may not sound dramatic on paper, but buyers do not live in basis points. They live in monthly payments. They live in debt-to-income ratios. And they live in the difference between feeling in control and feeling stretched too thin. So when rates move up, one of the most important things an agent can do is translate market headlines into real household math. That's where trust gets built. The second big takeaway is what that means for sellers. A lot of sellers still want to anchor to yesterday's market. They may believe inventory is still tight enough that buyers will simply adjust. And in some markets, especially where supply is still constrained, sellers may continue to hold leverage. But higher rates reduce the margin for overpricing. A buyer who is already uncomfortable at one payment level becomes even more resistant when that payment ticks up. That means homes that are not positioned correctly can sit longer, generate weaker traffic, and force price reductions that could have been avoided with smarter initial pricing. So this is a market where pricing discipline matters. Presentation matters. Local market knowledge matters. If you're an agent meeting with sellers right now, the conversation cannot just be, your home is beautiful and we'll get top dollar. It has to be, here's where the rates are. Here's how your buyers are reacting. Here's what affordability means in our zip code. And here is how we position your property to win in this environment. This is a very different level of professionalism. The third key takeaway is for brokers and team leaders. This kind of market exposes weak communication. It exposes low-skill agents. It exposes people who built their business around easy momentum instead of clear guidance. At the brokerage level, this is the time to train hard on scripts, affordability conversations, lender coordination, pricing strategy, and local market storytelling. Agents need to know how to answer questions like, how much did my payment really change? Should I wait for rates to fall? Are there more negotiation opportunities now? Should sellers still expect multiple offers? What are buyers in our market doing right now? The brokerages that help their agents answer those questions confidently will have an advantage because in uncertain markets, consumers look for clarity. They do not just want optimism. They want informed confidence. The fourth takeaway is that this story is national, but the reaction is always local. That is critical for content creation too. Nationally, rates moving higher is a big headline, but locally, the effect depends on inventory, price point, job growth, commute patterns, consumer sentiment, and who the typical buyer is in that market. In one metro, higher rates may knock entry-level buyers out quickly. In another, move-up buyers may stay active because they have more equity. In another, luxury may keep moving while the middle of the market slows. So when you create content around mortgage rates, the best approach is not to stop at the headline. Bring it into the local audience. Talk about what this means in your county, your city, your suburb, the price bands, your pending activity, your showing traffic, and your conversations with actual buyers and sellers. This is where GEO and AEO really matter. People are searching with intent. They want to know what mortgage rates mean in Chicago, in Indianapolis, in Tampa, and Omaha, or whatever market they care about. And platforms are rewarding content that answers real questions clearly and directly. The fifth takeaway is that this market can create opportunity for great agents. That may sound counterintuitive, but it's true. In easier markets, mediocre service can survive. In complex markets, expertise stands out. When financing is harder, guidance matters more. When buyers are anxious, clarity matters more. When sellers need a reality check, strong communication matters more. So yes, higher mortgage rates are a challenge, but they're also a separating force. They separate advisors from order takers. They separate skilled negotiators from generic marketers. And they separate professionals who understand affordability from people who only know how to talk in the headlines. That's why I think this is one of the most important real estate stories in the country right now. It's not just about rates. It's about behavior. It's not just about affordability. It's about trust. And it's not just about market conditions. It's about which professionals know how to lead when the market gets harder. If you're an agent, broker, or team leader, now is the time to get sharper, not quieter. Because buyers still need help. Sellers still need strategy. And real estate professionals who can explain what is happening in plain English are going to be far more valuable in a market like this. If you're seeing this play out in your area, I would love to know what is happening in your market right now. Are buyers adjusting, hesitating, or pushing forward anyway? Let me know.